All right. Good morning. Welcome to stream number 13, day 3 of the FTMO challenge. And we are currently sat 1% up. That's not where I left you yesterday. So I ended the stream in a loss yesterday. I did say that there's a possibility I may trade more later on, and I did. So what you're seeing here is a 2-minute chart of yesterday. We made a short trade here, which was a big mistake, which we went through yesterday, so I don't need to go over that again. I ended the stream somewhere in this noise here, around 9 something, and then I've made a good trade. So the market sold back down to the value area low, and then we had a very, very strong green candle here. I bought a few points down into this next candle with a stop loss below the low here, which was about a 20-point stop loss, and I held all the way up until the price got to around here, somewhere around 11:30 is when I took profit. I took profit there because it was at the high of the morning, and that was a great trade. That was a great trade. And now we ended up about £300 in profit yesterday. We're about £700 up overall now, which is 1%. So it was good, although that mistake, that poor trade yesterday, is at the forefront of my mind as opposed to the good trade. So moving on to today, I'm changing time frames that I'm looking at. So rather than looking at the 1 minute and the 5 minute charts, I'm now looking at the 2 and the 10. So I'm just going slightly up on the time frames, just to try to cut out a little bit of the noise when it comes to the price action. So the smaller the time frame, the more sensitive the chart is to small movements in price, and I find that the noise of the 1 minute chart is not necessarily helping my decision making. So I'm just going out to the 2 minute chart. So the sort of the popular day trading chart setups is either the 1 minute and the 5 minute, which is the most aggressive, shortest time frames. Then you've got the 2 and the 10, which is what I'm going to be using today. And then you've got the 3 and the 15, and then you've got the 5 minute and the hourly. That's sort of the pairs that people tend to go with. It's good to look at multiple to have sort of one shorter time frame, one wider time frame, just so you get a little bit of that extra context. But yeah, we'll try this today and we'll see if we prefer it or not. It's complete trial and error when it comes to picking a time frame that works. But I've been back through the last couple of days looking at the 2 minute chart rather than the 1 minute, and I like it. I do like it. So where are we today? We've just hit about 20 minutes ago, 25,000 for the first time. And we've unsurprisingly sold off from that level, maybe just temporarily. We are coming into the overnight, which is the Asian session value area high. So it'll be interesting to see what the market does off the open. In context to yesterday, the value area high is right at the bottom of the overnight range. So if we do come down to there, it'll be interesting. It's a very similar setup to yesterday. We're very much bullish as long as we hold above the overnight range. So if we can avoid breaking below the overnight range, we're going to be bullish. But unlike yesterday, we're not going to make any rash decisions to change that narrative. So unless the market can push below the overnight range and hold down here, we will not be taking any shorts. To take any long positions, we need to see the market come down, either come down and test some of these key volume levels, or if we do just rip up off the open, then we'll see some sort of retest of these daily highs or yesterday's highs. So we will see what happens. So the way this challenge works, and the reason it's difficult, is because FTMO track my net profit as expected, but it doesn't track net loss. So currently I'm obviously £700 up, but the 10% drawdown is trailing. So it's my current overall gross drawdown is minus 1%, and my current gross profit is plus 1%. And essentially I need to hit plus 10% net profit before I hit minus 10% gross loss, which is why it's difficult. So it's essentially rewarding consistency. So you don't want to see big swings in the account, because if there are big swings, then even if I do end up hitting 10%, I'm going to have hit minus 10% first. So we need to keep our win rate high, essentially. So if our risk reward is around 1-to-1, which is around where my risk reward tends to be, then we need to have a win rate comfortably above 50% in order to pass this challenge, which is why yesterday's mistake is frustrating, because taking a loss due to the probability of the system is absolutely fine by me and is inevitable, but taking a loss because I haven't traded the system that I was supposed to, that's an unnecessary loss, and that's the sort of loss that could cause me to fail the challenge. So yeah, we're going to make sure we don't do that again. So yeah, the first 3 trading days here of the week and of the year for me have all been very similar. Uptrend previous day, gapping up, Asian session trading above the US session, and it's a case of being very patient to get the right entry, which we did really well on Monday. I made a really good trade, which required lots of patience, not to jump in too early. And yesterday we also made a really good trade after the stream. So the only thing that's stopped this from being a perfect start has been that short trade yesterday. But overall, I would have bitten your hand off for a plus 1% start in the first 2 days, ultimately, because we're 10% of the way there. This is actually a 2-step challenge. So the 10% profit target is just the first stage. The second stage is a 5% target. They call that second stage the verification, but it's the verification stage is twice as easy as this initial stage. So really, it's about passing this first stage, and then the second stage should be nice and easy. Trading at all-time highs is a bit different to trading below the all-time high, because if you are trading above the previous highs, and if we're trading at all-time highs, it's there's no profit target, because there is no telling where the market's going to go, which can be great if you get a big runaway uptrend, but it can also make it tricky, because you don't want to be buying right at the highs of the day. So as cool as it would be to just click buy and just hope that the market shoots off to the moon, it's difficult to make a case for that, because it's very hard to manage risk. Very, very hard to manage risk, and very hard to, and impossible to know your actual, your risk reward that you're expecting to go into the trade with. So I'd like to just let the market go, let it do what it wants to do, and then, get it to find a high and then trade some sort of retracement. Because then once we have a high to target, then we know our risk reward. We know if it's actually worth us entering the trade. But what is certainly clear is that there is some real strength in the market this morning. So our real areas of interest now look to be this pre-market high in this area as a potential retest area, and then also the value area high and previous day high down here. There are two areas where, if the market retraces, we will be keeping a keen eye out. But if it does, or whenever it does retrace into these areas, we need to see strong buying out of that level. So the first 10-minute bar has closed right near the highs. We will see what happens on the second 10-minute bar. You'll see that selling has just come in right immediately off the close of that 10-minute bar. So we're testing this pre-market high now, and we will see what the response is. Buyers have come in at that level. So buyers push the price all the way back up, and there's again some resistance here at the top. This is such an easy day to enter too early. This is such an easy day to get too excited. Okay. So this to me is a level that we could potentially break out and retest today. But I don't want to just buy above the high, because that's where sellers could come in and just the market could then come down and test the levels that I said I was actually interested in. But if it were to break out, I would want to let it go, retest what has clearly become a resistance level, and then trail off of that. But the market's coming back down again. So you'll see it literally just wicked, a tick or two above the high, and has now sold off aggressively. I would have probably lost money by now on this day a few months ago, or I'd be at least losing. I'd be in a losing trade. I would have bought somewhere up here. There's a real battle going on here. Be really interesting to see where this 10-minute bar closes. Questions I'm trying to ask myself now when considering trade ideas is, firstly, is this looking like this is going to be the best trade of the week? Because if the answer is no, it's probably not worth taking it. And secondly, am I willing to lose money on this setup? So is it a case of if I take this trade and lose, I'm fine because it was a great setup? Or is it a case of if I take this trade and lose, I'm kicking myself? Because I've taken in the past a lot of trades where it's a case of if I win, I feel like, oh, that was good. But when I lose, I feel, what an idiot. But there's other trades where I take it and I lose, but I'm like, oh, okay, that's fine. That's just probability. And they're the losers, which I can afford. But if it's not looking like this is the trade of the week, it's not a trade I need to be taking. Because ultimately, once I do pass the challenge, whether it's on attempt number 1 or attempt number 3, I'm trading such big size relative to my own bank account that it really doesn't take much for me to really make good money. You do not need to be shooting for 4 trades a day and 5% a week, to make a good living on this. And it's that realization that 1 or 2 good trades a week, you can make a lot of money from it. And that's part of the reason I'm trying to go for this prop firm, is because, trading my own money, first thing, I stand to lose more, but secondly, I stand to make less. So for me to make any serious money in the next few years, I'd have to really see some pretty big returns percentage-wise in my own account. But when you're starting with a £70,000 account, it's really, you don't need to be making 200% to make a living. It's that sort of shift in psychology that will hopefully encourage more patience. And that's not to say I don't think I'm capable of a 200% year. My stats from the last few months of last year certainly suggest that that is attainable at some point. And if they are my returns, then brilliant, but I don't need to be trying to force it. So the market is really, it's moving sideways, but it's moving sideways at all-time highs, which is certainly more interesting than if it was trading sideways within the overnight range, because this is really the market consolidating and potentially agreeing that this all-time high is actually fair value, which may set up at some point for a move higher. But it does sort of feel like the market needs to move lower to begin with, to find some more liquidity to actually make that move. Because if you extend that volume profile from yesterday all the way through to today, you can see the volume's pretty thin up here. All the volume is sat down here below where we opened today. That's where all the volume is. Doesn't mean we can't push higher from here, but it's something to be aware of. There's also some data coming out this morning. German unemployment and EU inflation an hour later, which may or may not have some sort of effect. But I don't want to be maybe entering a trade at 8.59 just in case. So the market just wicked down below this trading range, potentially now picking up some buyers, and we're now testing the top. Okay, well, it's a decent red bar, that. Decent red bar. So our area of interest really is down here, previous day high and the Asian session value area high. Wow, that's a pretty strong recovery. Sellers coming back in again. Nearly half an hour in, and we're back where we started, which could be a good thing if we see a strong reaction somewhere down here. Does feel like there's a potential long position here setting up. Market's moved away fast. I was hoping to buy off a mini retracement there, but might not be getting it. That was quick. Very quick move. Hard to say I missed that because it was very quick. this market does just want to run away, I need to not chase it. The idea was to get in somewhere down here, but as soon as this candle opened, it just went zoom, and there was really no time to actually get into a trade. So what we've got now potentially is a breakout retest of this high of day. It would have been nice to get in down here. That was trade idea number one, but it just moved away too fast. And then what we've got now is potentially another move down to test, or we're going to have a breakout and then a retest of the highs. Thing is, I can't say I should have been quicker. I can't say yesterday that I should have waited longer and then say today I should have waited less. It's one or the other. You either wait for confirmation and risk missing the old setup, or you are aggressive and risk entering too soon. And for the sake of me passing this challenge and being sustainable, I'm much better off missing the occasional move than I am getting in too early. Because I can can't afford is to rack up unnecessary losses. So, it's either one or the other. You can't have both. So, you just need to be at peace with that. Ultimately, the best setups of the week, like the trade I had yesterday off stream was, it gave me plenty of time to enter, so the best trades are going to be the ones where I do it at my own pace, not the trades that I have to chase or enter early and risk getting it completely wrong. So markets breaking out. So changing screens now in the anticipation there's a potential trade setting up here. Potential being a key word. So the temptation to buy here was incredibly strong, because you've got a strong move up. You've got buyers coming in at what was the pre-market high. The temptation to buy there was incredible. But this is why we don't buy until we've seen that breakout, the initial breakout be successful. Because I'd have bought here, stop loss here, and so we'd be almost stopped out now. I was very wary of the fact that we're at all-time highs here. And I did, I said one of the first things I said today was this would be such an easy day to get in too early and end up buying at the high. I just really don't want to be one of the suckers that does that. So I'm currently leaning towards just not taking any trades. I think this was a good setup back here if it had given me time to enter, which it didn't. So be it. Just really don't find the idea of buying up here attractive. I just don't think I want to bet on the market soaring higher before some sort of deeper retracement. It just feels like the market wants to come back here and then maybe head higher. But so I would say so far this has been a much easier morning to lose than it is to win. I think there was one good setup, which there was no no actual time to enter it. I think there's then been several other potential traps. I think this recent move here was probably a trade that a lot of people would take, including myself many times in the past. And then you're kicking yourself because it's, of course that happened, So we're back here again, which is back towards the previous day high. I'm interested to see what happens at 9 o'clock with the data release, see if that has any effect whatsoever or not. See if the market can make a push down to some more of these overnight levels. So you could say, well, this is just another setup. This was a good setup that I couldn't quite take, so why not try it again? Well, we've just seen that the market has pushed up to the highs and has just sold straight off, which doesn't make me overly confident. Doesn't make me overly confident now of being a buyer, where back here I was like, okay, the market could really make a move, and now maybe this is going to be the true move higher, but it just feels precarious. But I'll see. If the price action is there, then this would be a valid setup. So let's see if the market can hold this area. But I'm certainly not going to click buy too quickly. I really want to see some proof that these levels are going to hold. It's a 1 minute. It's a 1 minute chart you're looking at now. It doesn't seem like the MT5 has the 2 minute chart, unless I'm missing something. So I'm still looking at the 2 minute, 10 minute on Trading View. Just got the 1 minute on the screen you're seeing. So yeah, again, if you bought here, you're immediately under pressure, you could say. Oh, so yeah, let's just see what happens at 9 o'clock. Let's see what happens. I'll switch back screens. Oh, I'll be back in a few minutes. Just take a quick break. Okay, a few minutes to go till 9 o'clock. Again, you can see once again you've got this 1 minute candle closing at the highs. You think, okay, here we go, and then once again you're straight back under pressure. So I'm certainly not writing this morning off at all, but I am just gonna sort of question every idea extra thoroughly today. Even if this looks like a potential trade here, I'm not going to take it. I literally said at the start of the day, I don't want to be taking a trade at 8:59 right before the data release. So I am going to stick to that. Ultimately, I think the trade today would be a breakout and then a retest of this very, very clear resistance level. So if this resistance can turn into support, then that would be the trade of the day. It's just whether the market's strong enough and if there's enough volume to actually make that happen. Being at all-time highs, it's just difficult. So this entire hourly candle is only 50 points, which is pretty tiny, really. Pretty tiny. Yesterday's first hourly candle was 90 points. The day before that was nearly 200 points. So volatility is down today. And, I think that's probably more than anything because of a lack of liquidity at these all-time highs. The market's just running out of a little bit of steam. So again, you see very strong. You get a wick down test, closing at the highs. Immediately you're under pressure again. So 100% the right call not to be trying to trade. It does look like there's a little bit of something picking up here just before 9 a.m. So it'll be interesting to see if this has any effect on anything. So it's unemployment, German unemployment. So it appears that unemployment is up from last month, but below what was forecast. And you've also got the CPI, Consumer Price Index. Which the US CPI is important. I don't know how much the German CPI actually affects anything. So we've got buyers coming in here below the low. We've got a new hourly candle forming. That's a rather strong candle, isn't it? Problem is, where do you target? The range is just getting tighter and tighter. It's just not. Yeah, when you look at this candle here in isolation, you just look at it in isolation, you think brilliant, brilliant. When you actually put that candle in the wider context of what we've done the last hour, doesn't really mean anything. I mean, look at this candle, and then nothing happens. This giant red candle, nothing happens after it. So we've just not got any follow through this morning. So all of these big strong candles closing at highs and closing at lows, these are only useful when you have more wider context to actually back up that there's going to be some sort of follow through. So again, we're selling off here. And this has definitely been a mistake I've made in the past over and over again. It's this getting excitement over these individual candles, but really it's just noise. It's noise unless the wider price action is actually backing that move up. I still think the market's going to be headed lower before it's headed higher today. I'm just going to wait another 10 minutes and then I'm going to call it there. I do think getting as much satisfaction from not losing today, it's important that I enjoy the not losing as much as I do the winning, because it would be so damn easy to lose today. Another potential mistake I would have made in the past is, I'd be seeing this very clear level of support here and thinking, oh, if we break below, that's a great short. And I made that trade in the last week of December that I was trading and lost. Because rather than seeing this as an area to be short, what the volume profile tells you is this is actually an area to be long. This is an area where buyers are likely to be sat waiting with orders, because we're above all the noise yesterday. So where are people going to be wanting to buy? Well, they're going to be wanting to buy back towards yesterday's highs. Somewhere in here. This is where it would be good to buy, not good to sell. So that's why I would only consider a short below the overnight range down here. Because if we can get down and break down here, then then we're back into yesterday's range, and then you're looking back at the lows of yesterday. But anything above this overnight range low is, to me, bullish. So you see the market's just moved down below this entire area. It's actually just made a new low for the EU session. And buyers have immediately just come and bought underneath. Doesn't mean it's going to be sustained. It doesn't mean that now suddenly the market's going to go, but it does show that, and I did yesterday. This is what I did yesterday. I was a seller here yesterday. As soon as the market dropped below this range, I sold, and then buyers came in, and I just got completely screwed. Because this short time frame suggests this is a short. The wider time frame suggests it's a long, and it's the wider time frames that you need to pay the most attention to when it comes to your overall bias. It's a really hard thing to get your head around. Really hard. And it's sort of taken me a year of trading to actually come to realize that the market moves based off of these volume profiles, based off of where the buyers are sat ready and waiting. It doesn't move based on what the candle patterns are doing. Okay, that's going to be me finished, because the longer you sit here, the more you start to see shit that isn't there. There really are no trades for me here, not for a while. You know, if the market were to move all the way down here, that would be a real potential buying area. But you know, that might not happen at all today, or it might not happen until 6 p.m. And I've got too much to do to just sit and watch and become tempted. So a good day. This was a good day. I would say this is maybe the best day of the week, because this was the easiest day to lose and the hardest day to win, and I've avoided losing, which is, you know, good, because this trade here, I shorted this yesterday. I shorted this a couple of times in December, losing every time. This long trade, oh sorry, I'm looking at the wrong screen. This short here, I've lost this trade multiple times. This long trade here, I've lost this multiple times. And today I haven't lost either, so good job. I'll be back tomorrow. Of course, hopefully the market will be slightly more interesting, but if it's not, then we need to just make sure we don't lose again, and maintain our 1% advantage on the account.